Welcome to Biztech's Technology Show, the show where we feature tech companies across Asia talking about their solutions and how they make a difference in the technology landscape. Now, today we feature Concirrus, a leading insurtech specializing in transforming the future of risk selection, pricing, and claims using the latest development in data analytics, AI, machine learning, and digitization. Now, here to tell us about Concirrus is Mike Davies. He's the head of Asia Pacific for Concirrus. Mike, welcome to the show.
Okay, thank you, Brian. Thank you very much for inviting me.
Now, Mike, set the stage correctly and tell us what Concirrus really does and give us a brief explanation of your history.
Okay, well Concirrus is a 10-year-old. So it was founded in 2011, and it's a 10-year-old Insurtech company. It was founded by the CEO, Andy Yeoman, who is a British-based individual based out of our office in London. And for 9 years, we effectively built our business within the UK. And initially, we started to focus on automotive insurance because we thought there was an opportunity of using data and analytics to improve the profitability of automotive. But we found that space very crowded. And we suddenly had a light bulb moment of looking at marine insurance. And we realized that marine insurance was a very challenged class of insurance, as it was not very profitable. A lot of the companies were struggling with it, and it became a non-preferred class of business. But what we realized as Concirrus is there's a huge amount of data regarding shipments of goods, movements of vessels, etc., around the world. And there was no company in the world who was harnessing this data to improve the decision-making of insurance companies and the underwriters within insurance companies. So we started to focus very specifically on marine insurance, particularly marine hull and machinery, which is the actual vessel itself, so insuring the vessel. So it's something similar to motor insurance, except on the high seas of the hull of the vessel. And we started to build data sets around that. And for 9 years, we were very, very successful in building these data sets and attracting clients within the London market. So our initial focus was in the London market. Of course, you have Lloyd's of London, which is the oldest marine insurance market in the world. And we really started to sell our products to them, and they found it very attractive. They really saw the benefits that Concirrus could offer to them. And so we built our business around the majority of the Lloyd's syndicates, and we became very, very successful in that marketplace. But Andrew Yeoman decided, of course, that we will have to look beyond the UK and beyond London as a company if we wanted to grow. And so at the beginning of this year, 1st of January this year, we launched Concirrus in Asia Pacific, based in Singapore office. And I was fortunate enough to be brought on board to run Concirrus in Asia Pacific. Me personally, I mean, I don't come from a technology background, but I come from an insurance background. I have over 40 years of experience within the marine insurance industry. 25 years of that has been in Asia, based in Singapore, looking after businesses across the Asia Pacific region. So combining my knowledge and experience about the industry and the fantastic data sets that Concirrus are able to provide to our customers, combining those two things are making us very successful in launching our products in Asia Pacific. Also, earlier this month, we've moved into the US. So we've launched Concirrus US at the beginning of July 2021. So we're very much a growing and expanding organization.
Now, could you tell us a little bit about your product and service offerings in Asia, specifically in the marine market?
We are. I mean, and what we see with our products is it is becoming more agnostic against lines of business. So we have started with marine hull. We're now working with marine cargo as well. So the both aspects of marine insurance. But we're broadening out to the entire specialty insurance market. So we're now looking at developing for aviation. So the planes, the transportation of the movement of planes, offshore energy, so the movement of oil rigs and the production of oil rigs, on offshore bases. So we see our products in the future will expand very much so into specialty lines of insurance. But specifically at the moment, we are focusing on marine. So both marine cargo, marine hull, and marine P&I, which are the three major lines of business that we're focusing on. And our customer base will really be from threefold. It will be the insurance broker, who is the broker who will deal with the individual clients, the direct clients, and they will then take that business to discuss with the international insurance companies. So we have the brokers, we have the marine insurance companies, and we have a more specialist area of P&I clubs as well. So they were the three locations where our client base currently is.
How different is the marine business in the UK compared to Asia?
Marine business is exactly the same. It's a global business because.
Now, what I mean specifically is actually, I should be more specific in terms of the adoption of technology, because obviously you started off, as you said earlier in the interview, basically capturing the Lloyd's syndicates, and that gave you a huge reference customer base and a pool of knowledge and data. Which obviously makes your job in Asia very much simpler. You walk into an insurance broker and you say, yeah, all the Lloyd's syndicates are using us, and they'll say, okay, where should I sign and how much do you cost?
If only it was that easy. It was only that easy, Brian. But certainly, of course, it makes it far more easier for our position here in Asia because of the 10-year background we have and the very long client list that we currently have of well-known clients in the London market. But really, Lloyd's of London is just one market, and it only represents relatively a small percentage of the global marine insurance premium. The larger players in the marine world are the insurance companies, the international insurance companies. They're both from Europe, from the US, and from Australia. So really, they are the bigger target really for ourselves as Concirrus, and also by targeting companies within Asia, we're also targeting their data. So we're always looking to, of course, to build our data sets. We have significant data of the movement of trade out of the US and out of Europe. What we're looking to do is continue to build our data set so that we can become more and more accurate. If we can put Concirrus into one word, it's predicting the future. What we're looking to do is to predict what the losses will be, which is the most important factor for insurance companies on an individual client. And what we're using is historical data plus behavioral analytics to predict the future of claims and the performance of an individual account and an entire portfolio of an insurance company.
Now, you've been in Asia for 25 years. 25 years. What do you see are the biggest challenges facing the commercial insurance industry in the APAC currently?
Okay, well, there are many challenges facing the Asia Pacific market, and if I could put that into three, there's really three factors. The first one is profitability. It's been very challenging over the last 20 years for insurance companies to find profitability, and this is because what insurance companies call a soft market. So we very much came into a soft market where there was a lot of competition. Very good for the clients because it drove down the rating, and so their insurance premiums were at a lower level, but they became unsustainable. The insurance premiums became at an unsustainable level, and that's really what we call a soft market. So what is happening now is that the marketplace is turning into a hard market. So we're suddenly now seeing rate rises as a result of insurance companies getting their act together by improving their underwriting decision, but also by the withdrawal of companies. A lot of companies didn't see it as a sustainable business and have withdrawn from the market. So that's one factor. The second factor is the cost of running a business. So we all know within the business place that the cost of running businesses have increased. So office rentals, salaries, the cost of running head office operations, travel, etc. And so this has also increased the cost of an insurance company and an insurance broker running their businesses. So you've got the soft market with the unprofitable business. You've got the increases in costs of actually running that business. And then the third factor is probably the most challenging, and it's true as a result of global warming, is that we are seeing significant increases in natural catastrophes. So the hurricanes and the typhoons are stronger, more frequent. We're seeing a lot more flooding events. We're seeing bushfire events, and of course these are all insured events. These all incur losses for insurance companies, and it hits them directly onto their bottom line. So once you put those three factors together, that really puts insurance in a quite a challenging position. And one stage that, not just in Asia Pacific, but specifically actually in Asia Pacific, is that the knowledge base of individuals working in the industry, a lot of them haven't experienced a soft market. The last true soft market was after September the 11th in 2001. So over 20 years ago, it was the last true soft market in the insurance industry. So really, if you think about that now, professionals who are under the age of 45 or 44 haven't experienced a soft market. So the brokers don't know how to broker business to the insurer in a hardening market, and the underwriters don't know how to deal with the broker broking the business in a hard market. So what that is doing is really creating a situation that needs to be addressed.
Mike, one of the other challenges also in the commercial insurance market, particularly in some markets in Southeast Asia and within specific verticals, is fraud, isn't it? Because, for example, in markets like Malaysia, in the automotive sector, subsector, for example, many companies have been experiencing over the last decade losses because basically the payouts are far more than premiums, even though you have a de-tariffication of insurance premiums.
You do, and I mean, of course, fraud is inherent in every line of business. But within marine insurance, we don't really see that or we haven't really identified that as a major problem. And of course, technology can absolutely assist that. I mean, one of the bigger data sets that we have is the vessel data sets, and every registered vessel lets out a location ping every 15 minutes. And Concirrus has the data for the last 10 years. So we have every single vessel's 15-minute pings for the last 10 years. And so that's a huge amount of data, amount of data. So what that allows us to do is to look at individual vessels. We know how fast they travel. Do they travel at night? How many ports do they visit? Do they visit unique ports which they don't normally visit, or are they actually visiting ports on a regular basis so that they know the ports very well? And we can build all this data up to help prevent fraud and to monitor the performance and the behavior of vessels.
Now, are industry players in the traditional insurance space in Asia adopting a data-driven model fast enough? Where are you seeing best adoption, and perhaps which countries are you seeing the slowest adoption?
Yes, I mean, adoption, to be honest, is quite slow. It's quite slow. I mean, marine insurance is a very traditional 350-year-old industry, and the people working in the industry, including myself, of course, are very used to doing it in a traditional way. So the biggest challenge that Concirrus and companies like Concirrus face is looking towards the future and really showing people that the future of improving these three challenges which we're facing with loss ratio, with cost, and with increased natural catastrophes, you have to start combining the amount of data that's available, because currently insurance companies, all they have is historical data. All they have is the past data of their own portfolio. What Concirrus is able to do is to build a huge amount of data from our existing clients. So what new clients can see is not just their own data, but the lessons and the behavior that we've learned from the data of our existing client base. But then we can also use that behavioral data to predict, as I said earlier, to be able to predict what the future will look like. And the issue that we have, and of course we find this in a lot of industries, is that we're talking to C-suite individuals and we're trying to persuade them to make an investment now for an improvement in 2 to 3 years' time. So what we really are doing is targeting the most forward-thinking of executives who can see, for the benefit of their company, now is the time to invest in something that will be embedded in our industry without doubt in the next 3 to 5 years. So by not investing now, you're putting off the inevitable, in my opinion, because when you look at an insurance company who hasn't embraced digitalisation, they will not survive. It won't be possible for them to survive because they just won't be able to compete with those companies that have access to the data that is now available to enable better decisions.
But Mike, so here's my, the question mark that is in my head. Predictive analysis should help. Theoretically, I mean, it seems so obvious. You've got the data set, you marry that with the data set which the insurer has of historical data of their own business that they've underwritten. You basically then combine that, you should be able to understand your risk and expected loss ratio a hell of a lot better. And then the predictability is going to be there. And so what that could mean then for me as the insurance company is, hey, 2 or 3 years down the track, my profitability will more likely than not increase. So please correct me if I'm wrong here in terms of my decision tree and analysis. That seems like a no-brainer in terms of making an investment. What's stopping these people from doing that?
Yeah, I mean, it's absolutely a no-brainer, and you're correct, Brian. Is it the 3 things that we've highlighted? With predictive analytics, you can reduce your loss ratio significantly, and we have data to be able to prove that if you were to run your business with Concirrus data analytics and without, there will be a significant improvement in the loss ratio of your business. But also with digitalisation, we're significantly reducing the cost of running businesses. So marine insurance particularly has come very clunky, with regards to inputting of data, monitoring of analytics, meaning catastrophe exposures, accumulation of values in ports. So we saw recently, of course, the very unfortunate explosion in Beirut,
Yes.
in the port of Beirut. Now, currently, an insurance company would have no idea what the potential value of goods they will have in that port on that particular day. What Concirrus can do by the touch of a button is be able to tell you predictably, but in very, very, almost 100% certainty, what you as an individual insurance company, what was the value of vessels and goods you had in that location at that particular moment of the explosion. So not only is it improving the profitability of your business, it's making the understanding of your portfolio and the understanding of your exposures much significantly improved as well. Another example is the grounding of the Ever Given we had in the Suez Canal. So a couple of months ago, the Ever Given grounded, and one of the busiest vessel routes in the world was blocked for a period of time. And what Concirrus was able to do was to monitor the buildup of vessels at either end of the Suez Canal and the buildup of cargo on board those vessels. And what we will do to our existing clients is we could tell them specifically how much value they had in a very confined space for that period of time. So they had a view on whether they needed to buy additional protection. So if they had reinsurance that didn't protect the value that was being built up at that period of time, they were then able to go and buy additional protections to make sure they were fully protected.
So Mike, who are some of the forward-thinking companies that perhaps have started to invest in solutions like Concirrus in this part of the world?
Well, in this part of the world, of course, we've only just begun. So it really is. It's quite a it's quite a journey to talk to clients and to show them the benefits. And
yeah, because the sales cycle is pretty long, right?
I wish everyone was like you, Brian, and could see it immediately. But unfortunately, when people are embedded in the way which they do their business, then it takes a while for them to change. And they're not just changing themselves; they have to change their entire department and their entire mindset of their staff. So it is quite a big decision to make that. But we have been very successful with our discussions. And certainly before the end of the year, we will expect to have 3 or 4 major insurance companies that will have come along and to have purchased the Concirrus platforms. And what we then see, and we talk about it chipping away at the dam. We see it chipping away at the dam. And once the dam is broken and the light comes through, we think there will be a rush then of demand for clients, because once we sell the Concirrus products and we help insurance companies understand the risks a lot better, the insurance brokers who are visiting the insurance companies may not have as good a data as the insurance company already has from the Concirrus platform. So that will then create a demand by the brokers.
Yes.
Get themselves onto a similar footing as the insurance companies are on. So that's how we see the next 2 to 3 years of how the expansion of Concirrus will be within Asia Pacific.
And I think one of the biggest challenges, as you said, as you expand and that your go-to-market strategy, meaning start with the insurer and then create demand from then insurance brokers, I think the biggest challenge for Concirrus, therefore, is the change management part, because the technology deployment is one of the issues. The bigger issue, as you pointed out, is the understanding that we need to change. And then the secondly is to upskill my people in the department to make them ready for that change and to reskill them so that they can embrace the technology.
Yep, absolutely. Because what we don't want is for an insurance company to adopt technology like Concirrus and then for it never to be used, for it to be sitting in the corner and never be used. So, certainly for me and my staff in Asia Pacific, one of the big areas that we can offer is a consultancy. Because we're coming from the insurance industry, not only are we able to provide the Concirrus platforms, but we are then able to help the companies who have purchased the platform with a consultancy program to be able to train their underwriters in how best to use that platform and get the best out of it, and to really rebuild their forward planning, their action plans as to get the best out of the data that's available to improve their profitability and to grow their business very much so. So it's really enhancing the experience of the underwriter, because nowadays a lot of underwriting is data input, it's a lot of processes. We can now take away all those processes. So we use learning, of course, but we also use optimal character recognition from submissions that are received from clients and from brokers. It reads all the data automatically and ingests it into the system within less than a minute. So the hours and hours that currently individuals are taking, inputting that data into their system is done automatically within 1 minute, and already they have all the data ready at their fingertips to do what they do best and analyze the risk and make decisions on if they want to write it, and if so, how much of it do they want to write.
Mike, final question. Any final thoughts from you before we end this conversation?
Yes, I mean, I see the transition for now, and for me, because I've been in the industry for so long, it's a transition for me as well as the people that I'm speaking to. But historically, 350 years, we've based our business on hindsight underwriting. So it's always been about the past. What we really need to do now is to look at foresight underwriting and really look towards a dynamic, forward-thinking business and use the data that's available. I mean, it's not freely available, but it's there if you know how to gather it, and use that to enable yourself to make better decisions, to then fix the 3 problems which I highlighted: is the loss ratio, the cost of running the business, and managing the exposures to the increased natural catastrophes that will undoubtedly occur in the future. So it's the way forward, absolutely.
Mike, thank you very much for taking the time to be on the show.
You're welcome, Brian. Thank you very much.
Now, we've been speaking to Mike Davies, Head of Asia Pacific for Concirrus on Biztech's Technology Show. This video will be on our Facebook and LinkedIn sites, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thank you very much for tuning in.